Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about a stock, or rather a fund, an inverse leverage fund that I have talked about on the channel a number of times. I wanted to make everyone aware that this is a fund that shows a inverse leverage against QQQ. And essentially what this means is this is a fund that can move pretty rapidly, and it's going to go in the opposite direction of QQQ, which is the NASDAQ Top 100, so heavy tech. One of the reasons I like this fund is because it does play inverse against tech, and you have the capability to hold an underlying stock or fund as opposed to simply shorting a stock or buying puts. Because this is a fund that has a lot of volatility, you can see over the past year it's done very well as you've seen a decline in the stock market. I personally have been playing it by way of purchasing shares and then selling covered calls, and that's what I'm going to talk about today. One of the items that I would call out here is you can see some of the volatility associated with the fund, and that has caused the options premiums to continue to be quite high. Right now, you can sell a covered call, which means you own 100 shares of the stock. So if you were to purchase about 100 shares, that would be about $4,800. That would allow you to sell a covered call expiring next week for $48.50 at $230 a share. This is just north of a 4% return on investment. Now, if the stock price next Friday is over $48.50 a share, you will be forced to sell your entire holding at $48.50. So you can see that this says sell, and I can sell this option right here, which means that I will get that $210. Now, if I once again have those underlying shares, I get that today or the day that I sell it, and I will be just simply missing out on potential profit. So there is no potential loss here on the right-hand side. That would just be unexpected profit. One of the things I like about this strategy is that this gives you the capability to have exposure to an investment that is bearish on the overall market, in particular tech. However, you continue to bring in income. Now, dividend income is taxed a different way than capital gains, and covered call premiums are taxed in the same way. This will be taxed as ordinary income, where you will have to pay taxes on this income over the course of this calendar year. So be aware of that as you make those decisions. Just keep in mind, I'm by no means a financial advisor. I'm just some guy on YouTube. But please be aware of how your trading impacts your tax brackets. So one of the reasons I sell this is it is in a tax advantaged account, and this enables me to continue to sell calls throughout the year and continue to collect that premium even if the stock is going up or down. So this is a great way to generate, in this example, anywhere between $200 to $300 on a weekly or bi-weekly basis. So there's a lot to like about this strategy, and it's quite a bit lower risk than something such as buying and selling naked calls or puts. So let me know in the comment section down below if you sell covered calls or how you're trading the current market. I'd be interested to know. Thanks for watching. Talk to you later.